Hey, good morning. How are you? It's a Thursday. What's going on, my friend? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. I am a currency trader, and I've been doing this a very long time. And I'm here on behalf of TradersWay. They would like you to be a huge trading success for many years to come. That's why we do these webinars every morning. I like to look at it as an investment up front into your success. So what you need to do is work your butt off, blood, sweat, and tears for years, and grab that success in front of you. Do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. Thank you for showing your loyalty and respect every morning. It's the best hour of my day, typically. If I wake up cranky, I just can't wait to get to this webinar with you because you make my day boot. So, ask questions, get involved. Let me know how it can help you become a better trader. Remember, I'm not here to tell you what to do. I'm not here to give you trade signals or something, but I will teach you how to trade. The good, the bad, and the ugly. How does that smell? So please visit TradersWay.com and become part of our trading family. Yeah, congratulations to our South African brothers and sisters. You got to ruin the country for you. I'm sure it's going to be way different. It's like, boom, problems are fixed now, South Africa. Good job. Okay, good. Yeah, I missed my chance. I would have done a great job ruining the country for you. Yeah. So anyways, hey, another great day to be a currency trader. People are freaking out. What's going on? What's going on? Dollar's weak. Yen is strong. What could it possibly be? Cool. So why don't we make sense of all this? I got Forex.Today open. We can go through some of your trade plans as well. I got to give a shout out to Joe, though. Joe has got the trade plan of the day. Whoop, whoop. Joe serious. I love it. I love it when I find somebody serious and they're like, I am going to make a difference. So let me zoom in a little bit. Cool. And Joe, that mug shot of yours is way better than that cartoon that was up there. Yeah. So anyways, check this out. Here's his overview of Kiwi dollar for the day. Starting out of the 2-year yield on the U.S. government. Here's his 10-year T-note. Look at that, on the way to 3.0 though, huh? Ho, 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 ho. Yeah, it was great. I sucked some cheap money out of the market at 2.0. And now it's on the way to 50% increase in interest rates. So I'm like, I'm glad I did that. It was fun. So we got an overview of the dollar and stuff. And so now we're looking at Kiwi dollar on the weekly. Then he drops down to the daily. Then he drops down to the 4-hour. Obviously, he's looking at this as resistance. Trying to time the rollover on the 1-hour. Here's looking at weekly pivots overlapping on a 15, dropping into a 5. Down to the what? So anyways, that's awesome, man. Look Look at this. It just goes on forever. And then here's my cabin. Where's this, Joe? New Zealand, you think, huh? I like the stone wall here. I like that stone wall. I want to get me one. It looks like there's snow on the roof right behind the, in the shadow area behind the chimney. That's interesting. So anyways, I'm not sure why you posted that. I guess I'm supposed to read it. I guess you're supposed to say, look at that, it's New Zealand. I'd rather see a chart, honestly, than a picture of a house, but it's your call. I put this little pop-up thing here. I hope it's not too intrusive, just trying to let people know that there is a real-time team. I see more of you guys are starting to hang out with the team. This is really good. They're giving you updates and chart updates and news updates and all that kind of stuff. So cool. So thanks for participating in the feed. Cool. Right on. Cool. So let's go through the charts here on my computer. What day is it? Tomorrow? Guess tomorrow's Friday, huh? All right. Well, looking at the euro dollar, do you want to sell the euro or do you want to buy the, right? Do you want to sell the euro or do you want to buy the US dollar? Anybody in that business? Maybe not today, but sometime soon. You're going to buy a dip at 124. I'd say 123.70, but to each his own. All right, so if you want to sell, you're going to find this attractive at this price. Okay? So I would even consider in the didn't want that. In the next 24 hours, which could be today, could be tomorrow, and this is going to be preference, and it's also going to be just what happens in the market today. But let me try to get my drawing tool here. Here we go. But if you're a bear, I would start looking for this kind of stuff. And between today and tomorrow morning, which is, before the end of closing, I would look to sell the euro dollar if I wanted to be a bear on all of this. And I don't know if that means sell the euro or buy the dollar. That's your call. But we're definitely at that place where if you were wanting to do it, welcome home. Okay. Somebody else said wait for a pullback, buy the dip for a breakout. That's cool too. I'm good with that. Doesn't change any of this. So what you're thinking is more like that. So wouldn't you also sell? That's where things go crazy, right? You're a bull, so you're going to sell it. That's the whole next step. That's when your world gets really crazy. That's when your world gets really crazy. Don't do that in your first decade of trading. I think a lot of you guys, or I shouldn't, that's unfair. I think a lot of newer traders try to swing both ways like a broken gate, right? They're bulls and bears. I would not trade that in the beginning if I were me, right? So I like to boil things down to the basics, right? The basic elements of the universe, and then go from there, right? And I actually thought about this. I thought about this. It might have been even before my business planning retreat, my famous business planning retreat of lore, where I sat down and I wrote down the characteristics of a successful currency trader. I'd never met one, didn't even know the name of one. So I said, well, what do I think this person would have as a characteristic? And I put things down like patience and discipline. I didn't say, you know, wicked awesome with the MACD or something, right? No, Mike, that's probably a detriment. So here's the thing. I would, in your first few years, maybe like I said, your first decade, I wouldn't try to get better at trading per se. Like you're so awesome, you can pick the tops and bottoms and all that kind of stuff. I'd rather you focus on being a better trader. And that would be patience and discipline and, you know, forethought and all that kind of stuff. And so, you know, but there's going to be a point, right? There's going to be a point in your career where you will sell the top, you will sell it so that you can buy it. Not what you should be focusing on now, because you'd have to see both sides, and there's a lot going into all that kind of stuff. And I would throw myself at the mercy of the court or whatever it takes to be to humble yourself and just say, I don't want to do that. I don't even want to focus on that. Okay? Because that I don't think is a requirement to be successful. I do believe patience and discipline is a requirement to be a successful currency trader. So I would focus on that way more than selling the top to buy the bottom so that you can make an extra 40 pips and all that crap. It's just not the right thing to be focusing on in the beginning of the career. And now remember, most people want to do that, and yet most people fail. So just figure out what most people do and don't do that. Okay? So anyways, I would do that. But I've been doing it for 15 years. Oh, yeah, Wayne. Yeah, Wayne, I want to get to, oh, I'm ready, Wayne. Are you patient? Yeah, I'm patient. Are you disciplined? Oh, yeah, I'm patient. Let's go. Where's the trade? Yeah. Good. Yeah. Good, I'm patient. Let's go. I'm patient, but I hate waiting. Yeah. Good. So anyway, both of these are in play. And of course, where do amateurs screw up? They trade sort of in this area, right? The circle of doom. Okay? So I'd rather you say, you know, where do you want to play this? Decide now. And you know, if you're going to sell high. If you're going to buy low. And then so now you got your price. Imagine you said that, like, yeah, as a seller, I'm going to look to sell this at 125-ish because you're a bear. Okay? So now you just need some sort of evidence of this on a smaller time frame, right? And remember, on the longer time frame, it could do this, which gives you a ton of price action on a 1 hour, 15-minute chart. But you're not always going to get a reaction like this. I think it's going to be more like this. What's the difference between the second one? Well, the first one, it took 15 minutes to reverse. The second one, it took a whole day, basically. At least all of London and all of New York to reverse. I think it would be more like that. Okay? And your general plan would be this way. Whoa. What do you think? Smell like a plan? Or buy it off the bottom? Troy is asking an amazing question. Thank you, T-Bone. Troy says, what makes a bull or a bear? First and foremost, fundamental analysis of central banking policy. That doesn't mean news, okay? What that means is how a central bank looks at trends within those economic releases, aka news events, right? The trend in those, and how they would adjust their policy to meet their mandate based on this data that's released. Okay, if you don't know what that means, you can take the fundamentals course or long-term charts. Okay. So, Troy, is this bullish or bearish? Then you're only allowed to buy. Done. You have a bias now. Cool. It's pretty tricky, right? Now, on this 4-hour chart, if we find ourselves like, let's clear this up. We find ourselves like this, then you have permission to switch teams. Now, the discipline is only being a bull or a bear. And the patience is waiting to get the market conditions to fit. Because you could go a half a day, a full day, sometimes even a week with no real trades plan. But that's a week without you losing money. And for a lot of people, that's a good start. And for all the sort of the newer people here, let me give you sort of the upshot of having a bias. When you're not correct on your bias, you're a bull, but the market is a bear. Well, how about let's switch this around. Let's do this a different way. Let's back this up. I gotta turn that off. All right. Okay, we're looking at this, okay? Let's say you're a bear. There's not a lot of opportunities to sell here, right? I'm sure you gave it some chances because you had a top here. So you would have had some trading in here. And you might have taken some of these roll reversals before it broke out. So you had a chance here. And then it broke out. But then it double top. So maybe you had a chance here. Maybe you tried that and that failed. And then it came up and hit some resistance. And maybe you shorted here or here. And it worked for a while, but then it dropped. And you notice that you got some swing trades here. Like you could have swung trade that and made a couple of hundred pips, right? But then you didn't get one here and didn't get one here. So whether you're scalping, swing trading, spot trading, there are trade setups here. And some of them work a couple of hundred pips. But there's not a lot of them, right? But you see that if you actually set them up like traded double tops and you traded swing trades, that there are trades here, right? There are trades here. You could have made, I'm just going to guess, 500 pips or a lot of break-even trades, okay, as a bear. In an up market, okay? So you're a bear and you were wrong. but you waited for good trades. Like this is definitely a sell zone here on Monday and on Friday. This is definitely a counter trend. This is definitely a sell zone right on Monday and again on Friday. I mean, these are definite setups as a bear, but it's a bullish market. So you were actually wrong, but there are lots of really good trade setups using multiple strategies. Cool, right on. But you were wrong. It's bullish and you're a bear. Bulls would have made a lot more. And there are some good trades in here, obviously, right? And that's the interesting thing about having a bias and having patience and discipline to set up trades. When you're wrong, you'll probably still make money, but you won't get a lot of trading opportunities. And you have to wait a little bit longer. You'll notice like it took a week for some of these secondary trades to set up, right? Look at Monday, there was an opportunity. Friday, there was an opportunity. Friday, there was an opportunity. Monday and Friday, there was an opportunity. Monday and, well, Friday kind of set you up and you probably lost on this. Monday kind of a setup, and then Friday again a setup. You know, there's one or two trades a week, but you made money most of the time. Now, so when you're wrong, you just don't get a lot of trade setups, but you still have the potential to make money. Okay. Now, when you're right, and by right, I don't mean your bullishness or your bearishness, because that's going to be developed by your long-term fundamental analysis, okay? Right? What I mean is, I guess I shouldn't say right or wrong, because it's when the market agrees with your bias. Because remember, it really often it doesn't come down to how right your analysis is. It's the timing of whether the rest of the market agrees. Because even a lot of the time, in my opinion, the whole entire market is wrong. Just don't trade against it, right? But there will be a time, right, when you say, okay, I'm a bull, and you wake up in the morning, you're like, dang, look at that bullish setup, and you take it, and you do really well. It's not you, bro. It's that you got lucky enough, you had a bullish bias, and the market was bullish. And then a couple of days goes by, and then you get another setup. You're like, woo, look at all the money I made. Look at all these pips I'm making. Okay? And you do really, 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 really well when the market agrees with your bias. And you do okay when the market disagrees with your bias. Where most traders lose money, or let's say give back their profits from yesterday or last week or last month, is when they're not, where they're switching and they're trying to figure out what the market's going to do. Oh, is the market going to buy this today or sell it? And oh, what about the London breakout strategy? If I straddle the market over these 2 hours and then it breaks out and then I get this candle and blah, 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 and you're like, are you retarded or something? The London frickin' breakout strategy, that's what's going to build your successful Forex trading business? Chasing candles and grabbing leftovers and crumbs from real people? Oh my God, right? So I'd rather you say, look, I've analyzed the market either using like a daily chart or something or central banking policy, and I've made a determination as an expert, as someone in control of my destiny, I'm a bear. Now you look for bearish setups at resistance, and when the market turns bearish, you're going to do really, really well. But when the market isn't bearish, at least you're trading at resistance when it's starting to fall. You get it? You're selling at resistance. How bad could you possibly do? It's when you're like in between support and resistance because you're late and you're like, well, why don't I wait 3 candles and sell, it's weird, right? So that is where we need to get. So if you're kind of newer, I just got to like throw that out to you. The number one thing you need to do is set a bias, and everything else gets easy after that. If you don't do that, you're always going to be chasing pennies and picking up crumbs, and or is it the other way around? Picking up crumbs and chasing pennies, picking up pennies in front of a steamroller. So whatever. No, Troy, no, because what you want is not pair. Your bias should be per currency. It's not that I'm a bull or a bear on Kiwi dollar. I'm a bull or a bear on Kiwi, and I'm a bull or a bear on dollar, US dollar, and then I can look for relative strength. So let's say today Kiwi dollar was ripper strong. Well, then all I have to do is figure out, am I a bear on anything? What if I was a bear on US dollar? I'm like, oh, well, the Kiwi's hot today. What's the dollar doing because I'm a bear? I mean, all of a sudden you'll find yourself long, NZD versus USD, right? And then you start doing relative strength exercises like, so what else is weak today? Is the yen weak today? No, it's not weak today. Okay, don't buy that. Well, what about Swissy? No, not Swissy. Oh, look, CAD's weak. So you can all of a sudden you're long Kiwi CAD. Okay? That's why I have setups like this, by the way, guys, like pound. See this scan pound? Okay. What if I was a bull on pound? I would look at this and say, is the pound strong today or weak? So I could look at this and say, well, pound is going up against the dollar. The pound is not so much on yen, right? Kiwi is actually pulling pound down. And pound is actually still kind of, So I'd say, look, it kind of looks like the pound's getting crushed against these other currencies. Or at least the pound isn't stronger than these other currencies. It is stronger than the US dollar. So there are two things, right? Pound is sort of neutral, and US dollar is weak. You see what I mean? So you could say, oh, US dollar is weak? Well, I'm also a bull on Aussie, right? Let's say. So then you could say, well, then let's take a look at US dollar versus Aussie, or Aussie against everything. Okay, Aussie Swissy is at the monthly projected low. There's a possible counter trend, right? So anyways, I wanted to jump to Aussie dollar. Okay, here it is. So we saw that the relative strength against the pound was sort of neutral against everything, except it was stronger than US dollar. So the one thing we learned is dollar's weaker than pretty much everything. Then I could say, well, I'm a bull on Aussie. So then I could pull up this chart, and sure enough, this one's looking awesome, right? Okay, and that's based on a relative strength exercise. And check that out, M2, right? That predicts a high up here. So I could do things like buy dips like this, or even buy a dip like that, and play that out. Okay, and that's how you need to move. I bet you newer traders don't do that. I think what they do is they go through every chart and they say, is it going up or is it going down? It's more important to break it down. What's a particular currency doing relative to other currencies? It's called relative strength exercise, right? And you could say, so I looked at pound's neutral, except dollar's weak. So now I can do this. I can pull up the dollar scan and say, all right, pound is beating the dollar, and pound's not even strong. So what is strong? Okay? And you can start looking for setups. So if dollar's weak, everything on top should go up and everything on the bottom should go down. And you can see it down, down, down. That's weak dollar, right? And this means what if this currency now goes up? Oops. Does it look plausible that these things do this now? Scary thing is this then needs to have, it has to go through the pivot profit zone. This one's already done this. Okay. And you're probably looking for something like that. Okay. You see what I mean? What am I doing here, Troy? I'm selling dollar. I almost don't even care about the other things except which ones happen to be strong at the moment. All I know is I want to sell the dollar. Now, do I want to sell USD Swiss franc? Not here. I could, but I see this higher risk. This one looks fine. I'll kick it off the 21 roll reversal. Not sure what's going on here on Kitty CAD. CAD got ripper strong there for a bit. Okay, this looks fine. This kind of looks like a big roll reversal. This one looks like it's already started. All that kind of stuff. So now I have to pick and choose which one do I take first. Then when do I jump in second? When do I jump in third? When do I jump in fourth? Okay. It's when you get to that point, you'll start to see better success. Looking at charts and randomly throwing down trades because of the MACD told you so is just not what a professional would do. Right? If I said to you, so what are you doing today, Troy? And you're like, I'm selling dollar across the board. I'm just picking and choosing based on the relative strength of the other currencies. Like, oh, well, that's interesting. Okay. If you said anything else, I'm like, really? What are you doing? I don't know. I'm making it up as I go. Cool, right? Yeah, Barry. I don't know, Barry. What do you think? Let's see. It went up 200% reversal. Yeah, well, it's a scalp. Yeah, of course it did. It's a scalp. So when it comes down to the scalp, I sold, what was it, a 3A2 Fibonacci retracement on a new scalp? Sure. But you notice, though, it flipped at the support we identified. What I don't like, right? What I don't like is price action like that. I don't like it when it drops 100 pips and then rises 200. It's just not good trading. It's a lot of volatility, but I like the boring trades, right? Right? Isn't it great to just sell, sort of like swing trading? I like swing trading a lot. I kind of like just selling it, and I wake up in the morning, I'm up 80 pips. I'm like, that's really cool. And then by the end of the day, I'm still up, 50. And then I wake up the next morning, oh, look, I'm up 100 something, and, and by Wednesday or Thursday, I'm like, oh, I have to get out of this thing. I'm running into support or whatever it is, right? Like, I guess I'm going to pick up $1.50 on this, right? You take your 150 pips and you're like, oh, well, what do I do the rest of the week? I like that stuff. It's the get rich slow scheme, right? I showed you that in December. I think we made, what, 1,500 pips. I think January we made 2,000 pips, right? I think the first part of the month, I put you in a few scenarios that did really well. Cool. So that's how you put it all together. Oops. So weak dollar makes me want to do some exotics. Now we have to look at Rand just because of the political unrest. Just beautiful. So as swing traders, we know this is the sell. Funny thing is, you know, this is the target. In fact, this is the aggressive target. We've blown through those doors, but this isn't a technical setup. Okay? It's just not a technical setup. This was a technical setup, and that predicted here, which we got. This wasn't a good one. Actually, this is an up rather than this. So anyways, this is, you know, the fundamental move of the changing government. And now I'm starting to understand the African mind, right? Jumbo! Right? Which, it could be worse. May your life not be as difficult as it usually is not a compliment. Right? The currency rallying because, well, things can't get worse is just not comforting to me. But I actually heard somebody say that I was at a cigar bar over the weekend in Florida, and the guy sitting next to me says to his buddies, well, it can't get any worse. I'm like, oh, dude, don't be naive, man. It can get way worse. When you've hit rock bottom and you say it can't get worse, just remind yourself it's probably going to get worse, right? Yeah, that's a good one, right? May you not lose as much money as you typically do. Yeah, it's not a good thing. So anyways, so good job, South Africa. You finally have a chance again, right? Don't mess it up. Here's our Turkish lira. Much more difficult of a change in direction, right? Trying to show the arrow. Because we drew this last week, didn't we? I think we talked about this on Friday of last week, didn't we? Look at, I'm going to try to keep this. So last week, we were targeting here. Went up a little bit higher than I thought, right? I was thinking sort of this area. So it did this, but we're targeting here. So what did it do? It came down, it came up, it came down. It makes me think I really got to get the swing trading thing going for you guys. Shoot. Whatever. I'm just trying. Man. I'm trying. So anyways, so Toomey said I did set that up good. That's awesome. I could see I drew it with the little triangle drawing tool. So I think what I wanted was a breakdown and a rally and a drop, but we just didn't get it. Yeah. You can see I have it pull back, drop, and look actually where I said Monday it would start. Isn't that funny? It actually started to the pip. Look at that. Look at where I said it would start and where it actually started. Whoa, whoa. Hey now. Whoa, whoa, whoa. So anyways. Well, it's hard. So like this week I'm available, but next weekend I'm doing the thing at Harvard with the Fed official, and then I have another trip somewhere, and then I have another trip somewhere. No, webinars are one thing, but the swing trading is another, timing-wise. No, this goes back to a conversation maybe a month and a half ago, where I said, "Hey, would it be helpful if I did live setups of swing trades over on the weekend?" You know, and right, it was a premium thing you paid money for, and all of a sudden, like, a lot of people wanted that. I'm like, oh my God. So I don't want to make promises I can't keep, though, you know. Anyways, so let's go back to our setup. I'm thinking we need to maybe do swing trading like Fridays at noon or something. Yeah. It'll just be me and Katie. All right. Oil. So I think this was Monday when we were down here, and I said, wait for the higher high. You don't have to be the first one in this rally. Can anyone confirm that? At least I hope I said something like that, because I look at this and I say, well, that's what I would say if I were me. Which is a good, when you're a consistent person, it's really good, because I often, just in the little things in my life, I'll say things out loud. Well, I don't know what happened, but I know how I would have reacted in that situation, so I can tell you what happened. Right? I just don't do it. I'm very consistent in those types, in a lot of situations. So anyways, like, I don't know what I said, but if I had said anything, I would have said that, so I know that to be true. Therefore, I probably said it. So that's kind of what we were looking for if we wanted to be a bull. Whatever I said, it probably was something like that, because if I were me, I would say something like that. Okay? And treat it like a breakout. Hua? Guy's like, yep, you said it. Cool. I knew I would have said something. Thank you, me. Oh, I called it a J-Lo? I want to see a J-Lo, right? Yeah. Did I do the picking bottoms one? I don't think I did. No. Right. I said I'll say something like, I don't like picking bottoms because that strategy stinks. Yeah. Guy, you have to translate that in French Canadian. Yeah. Hey, have you watched what's it called? The Frontier or something like that? It's a Netflix show about Canadian fur trapping and American fur trapping back in the day. You know, and when Montreal ruled the world, it ruled Canada, and it was about the Hudson Bay Company once it started losing its grip on the fur trade. Yeah, it's quite good. I mean, I'd like to know, I'd like to see more of that time period. I always did. So it was pretty cool. One day I'm like, oh, look at that. The Hudson Bay Company was the first government in North America. right? And Americans get all, wishy-washy about Boston, how old it is. Harvard founded in 1636, right? George Washington's army gathered across the street from Harvard before going into Boston, to start the Revolutionary War. One by land, two by sea, all that kind of stuff happened right out the gates of Harvard. You want old, though? Go to Montreal, huh? Oh, the West. I have to look that up. Yeah, totally. All right, so anyways, oil. I don't know if you're going to trade the energy complex today, but it's a good thing to talk about on the weekend with your buddies. So what did you do this week? Oh, well, I traded the energy complex. You wouldn't understand. It's just too complex. They're like, oh, that sounds complicated. Oh, yeah. So I grew up in Canada, and Canada has a much different social setup regards to their, I don't know what you call them now, natives people, First Nations people, Aboriginal peoples. We used to call them Indians. So in Canada, like half my friends were Indians, and there were Indians in society. Like you'd walk down the street, there were Indians. In the United States, you can live here your whole life and never see an Indian. It's really strange. But so living in Saskatchewan, most of the Indians that lived in that part of the world were Cree Indians, but there were Crowfoot and Blackfoot, Ojibwan. My friend was Algonquin, but the Algonquins were more like Ontario, right, where Toronto is and stuff. And so you can think of Plains Indians like the Cree Indians. They followed the herds of buffalo, right? So when you think of teepees, you're thinking of the Cree Indians. No, they're not Cherokee. Like Cherokees are from like Georgia. When you think of when I say Algonquin, these guys had like cities because they didn't have to follow herds of animals, right? Then when you get to the West Coast, they stayed put. They had salmon, so you could just build a log house, right? Sweat houses and stuff. So the Indians had many, there's all kinds of tribes, right? But their cultures were quite different just based on their survival methods. And then all of a sudden you're in the United States, you're like, what Indians? There's no Indians. They've been locked up on reserve somewhere. Where in Alberta, Johnny? Mm. No. We're done, Frank. The false rally. So let's go to the yen pairs. That was like a month ago, bro. Oh, down in Calgary. Dollar, no kidding. You're talking about Jurassic Park, huh? Cool. All right. The false rally. Let's use this one here. So our plan in October, November, December was this. Okay. Then the plan was somewhere around the first Monday after non-farm payrolls, we would see a drop. Oh, look, that exact day, great. Then it would go to the third week of January, then you would get the false rally. Okay? Well, so Frank, based on relative strength of the other pair, of the other currency, you'll get a slightly different pattern, but you still have to time the strength and weakness of the yen. So I'm only talking about the strength and weakness of the yen. So if it worked out less perfect or more perfect on the pound, well, it's just because of the pound. So you have to take that and interpret, but it's not going to generally be way different than any of this. But, well, how many people here can confirm that all of this is true? That we were bullish in here, and you knew even down here that we'd be bullish for the first Monday after non-farm payrolls in January. Right? And then the third week of January, the yen pairs would rally again. But that wouldn't actually be a true rally. It would be a false rally. And that this would be down through February and March. How many people knew that that was true back in September, let's say? That all of that, to that degree of specifics, rally into the first week of January, then a significant drop, then a false rally on the third week of January, and then a big collapse all the way until the 1st of April. Cool. Nice. Cool. Then you must be filthy, stinking rich. Nice. So, okay, so let's look at Beast, since it was requested. Okay. Okay. So let's look at this. February. Hang on, Bubba. Oh, I gotta turn that off. Turn that off. Boop. Boop. Okay, so it started going up again. November. December. Here's the. So let's try to get this timed here. Clear it. Let's do it this way. January. Stupid drawing tool. There we go. Trying to find. Okay, this is about the first. I think that's the Monday that we expected a sharp decline in the yen pairs, so Japanese yen strength, right? Then we figured on the third week there would be a rally. That, I'm guessing that's about a third week. Okay. And it double topped there. But it's the February and March yen strength play, right? So is this one perfect? No. But you did know to take profit. You did know you had an opportunity to fall. And then the third week, and I'm sure that's pretty close. The third week might be in here. It would rally. You knew that too. And then once it rallied, it's not going to it's not going to go up and up and up and up. But you remember, everyone else thought it would go up and up and up and up, right? But we knew it wouldn't. So now, but then you got a double top. And so there's a lot of pound noise in there. But Here we thought the yen would strengthen. Here we thought the yen would weaken. And here we thought the yen would strengthen. Right? All of those should be true. The variable that we don't have an opinion on based on just that simple strategy is what the hell the pound's going to do. Okay? Well, Frank says, so now what's going to happen with the beast? Would you consider this support? Okay? And let me clear this out. What are you supposed to do at that pivot there? Let me get rid of this and kind of bring this in a little bit. Okay. What are you supposed to do at this pivot? Wrong. Take profit. Thank you, Daniel. So you should be done for the week on your pound. And then maybe tomorrow, swing traders could set that up. Yeah. Now, just keep in mind, we call that pair the Beast. I also have the nickname the Widowmaker for the pound yen. And I think you can find, if you did relative strength, there are better pairs to be playing than the pound yen. Right? So while you're messing around with that one, look how easy this setup was. The Aussie yen was quite easy. I said to probably ignore the Euro yen. Okay. So look at this one, guys. Here's one that worked even better than the setup we discussed, right? Here's the rally we anticipated. Here's the collapse, the Monday after non-farm payrolls, and then check this out. Here's the false rally. Whoa! Right? And here's basically the double top going in. I know it's not a double top, but compared to the other ones, like the other pairs are doing this at this time, right? So but we knew, right? We assumed, we don't know. Our trade plan was set for some time around this period for the yen to gain strength again. And it could last months, not just days or weeks. So we were thinking this at this time for all other pairs. Look at this one. Oh, holy crap. Right? Meanwhile, I think I was quite clear that I wouldn't look at a euro yen short. And pound yen would be, so anyways. It's your job to then take your strategy, you're a bull, let's say, on yen, against what? And that's why we do relative strength exercises, as I showed you today. Cool, right? Miggity MacD make you want to, oh, I guess it's this page. La 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 la. Load newest. You see this? Boop. Easier, huh? So here's the news. Thank you. So that comes out in real time. Yeah, ours line is really good. I had talked to him like a year ago about doing some serious advanced stuff on the math side. In particular, when we were talking about doing the conference in South Africa about starting and managing a hedge fund. And I was going to have him put together some analysis and a presentation on how to do risk-adjusted performance analysis and teach us about the different variations of Sharpe ratios, that kind of stuff. You know, he's a PhD, right? So, you know, he said you would do it, and, you know, I've just been so busy. Yeah, no calculus. Sick of calculus. Do I have any calculus laying on the floor? Got a bunch. Anyways, we don't need to go there. Hey, why not? So, here's just a quick one. Let's do some simple math rules. This is macroeconomics, all right? Let's do some simple math rules. Right? Well, that's totally simple. Yeah, so you can break it down and you can prove it. Right? Like, just remember those simple math rules. Right? I love it. Isn't it funny? If you don't know math, you're like, whoa, those are not simple math rules at all. Yeah, well, duh, right? So as you know, the marginal productivity of labor times labor over production is equal 1 minus the alpha. Well, of course. So if you see there 1 minus alpha, right, times 8k alpha, well, the A is technology, K is capital, and then the L minus alpha is labor. Of course, times the labor. Right. Yeah. Do I see a negative derivative of the alpha? Yeah, of course, the alpha is what? The capital, the technology of the capital, so to speak. So you have a labor, think of a laborer, and you're like, hey, what's, right? Hey, dig some ditches. And the ditch digger looks at you, you're like, can I have a shovel? Oh, you need some capital? All right. I'll give you some of my capital, which is essentially your alpha, right? Right? And then he says, well, how about a backhoe? A ditch witch, right? You want a ditch witch? All right. So now think of the worker with a ditch witch. Could produce a lot more than the worker digging with his hands, right? So anyways, whatever. It's only economics. Don't worry about it. Forget about it. All right. Oh, let's go through some charts. Let's take a look at the wizard. The Wizard of Joburg. Oh yeah, we just looked at this one. Euro USD. Yeah, all right, that's fine. See the oscillator? It's overbought, but not falling. That's important. Pound, lower high, lower low. I could see that. I'd really want to see dollar strength before I did it. It's also overbought, but not giving a sell issue. I can see the daily acting as resistance and the weekly R1, which is pretty cool, plus the roll reversal. So you'd hope it would roll over, but I wouldn't take the shot first. This is fine. This is fine. You can see the weekly targets here and here. I think we had this one, right? I wanted it to come down and then rally up first and then drop. This is showing its desire to head over, but notice how this is diverged. So that could be interesting. That could help that pull that around. Okay, so we see dollar weakness across the board, and this is the problem, right? Dollar weakness across the board, but there's setups for dollar strength across the board. So let it happen. Don't force it. Okay. And USD CAD, sort of a roll reversal. To me, that seems weak. I'd like to see a bigger play. I think there's a fib in here. I would. Oh no, there's a zigzag. Okay. Yeah. Yeah, I'd like to see there. So I'd like the other ones to go first. Okay. Just don't force the trades. Let the USD get strong first. Cool. Yeah, see? It takes so much effort to leave a thoughtful comment. Cool. Ryan put his photo? Cool. Yeah, faux show. On top of it, large and in charge, huh? Oops. What the heck's going on here? Cipher, head and shoulders pattern. What the hell is a cipher pattern? All right, so anyways, down. Okay, that's cool. That's fine. That's fine. Inverse head and shoulders. It's fine by me. Good enough. Why not? For pound, yeah, no. So I would want to see some bigger time frame stuff into that, but either way, that's fine. Yes, some of you guys are see, it's weird that some people would have issues and not other people. Like, you know, it's strange. I don't understand. Well, Frank, you do a relative strength exercise. So like I just showed you, I would open up the dollar versus everything. And when I saw the dollar starting to get strong across the board, then I would buy the dollar versus the thing I thought that was the weakest. Take one, then the other, then the other, then the other. Dalmas is going on the, yeah, I remember looking at that on the ZAR. Cool. Breakout, pull back. He's going to use the middle Bollinger Band as an entry. That's interesting. Oversold Stokes. Sure, that's fine. That only tells me it's everyone's selling it. So this is a weekly chart. Yeah, all right. I don't use weeklies. 4 hour, that's fine. This part is fine. Plus, we got the fundamental reason to be strong on there, right? Where did that chart go? There it is. Yeah, you can look at gold if you want to look at it as the anti-dollar. You can do that as well. All right. All right, I got to jump, babe, but it was real. Thanks for hanging with me today. Ted, it's a top-down approach. So the 4 hour has more information than the 15-minute. But if you're trying to reverse something and you anticipate the top on the 4 hour, you can try to turn it on the 15. Just remember, you're likely to see double tops on the 15 before you see a drop on the 4. But that's cutting corners and stuff, so you got to be careful. Okay. Well, it's not more powerful. It's just it's a different view, and you want to try to bet on the trend. For some reason, amateurs spend most of their time selling trends, and that might be why 95% of people lose money. Right? Just think about it. What do most people do? They seem to say, "I can't go any farther. I'm going to sell this uptrend. It's been rallying for 3 weeks. I'm going to sell it." It's weird, right? If it's rallying for 3 weeks, why wouldn't you buy it? Right? So anyways, peace on earth. May the pips be with you. May our profits be above average. Have a great day. I'll see you tomorrow. Thank you for being on my team. Thank you for being a client of TradersWay. I'll see you tomorrow, huh?